What's up, everybody? You are listening to the Budgets and Brews morning coffee break, where we discuss, chat, and ramble about last week's top 20 financial headlines. Today is January 31st, 2021, and with me today is our very own special guest, Captain Finance.
Captain will be filling in for me with the headlines, but they're going to provide you their thoughts on the most flavorful stories after we run through the top 20 headlines. If any of these appeal to you, make sure you click the link in the description. We have the full articles there. And just to let you know, you could be watching these episodes on YouTube if you're currently listening via podcast. So get your coffee ready and let's start brewing.
All right, Captain, what's up first?
Glad to be aboard, Tony and Rich. Thanks for having me. I'm just kicking it right now at the beach. Obviously, you can see that. Having the time of my life. But let's dive right into these headlines. So the first one up, we have GameStop, we have Reddit, and we have Wall Street. Click that link, learn a little bit more, and I know Rich and Tony are going to explain this at the end. Back to you, Tony.
All right, thank you, Captain. Next on our list is recreational cannabis sales began in Arizona last Friday. It's the 15th state to broadly legalize marijuana. Will we see more states follow soon? Who knows? Back to you.
All right, next we have Beyond Meat stock jumped up 18% after it announced a nice partnership with Pepsi. There's nothing more than I like, besides the beach, than a nice fake meat and a nice cold Pepsi. Back to you, Tony.
All right, next up is more than 65 million doses of corona vaccine have been administered globally as of last Monday, according to Bloomberg. The U.S. has been averaging 1.16 million doses a day, and at that rate, they're going to see if they can hit the goal of 100 million shots within the president's first 100 days. This should be promising news for stocks.
All right, our next headline, another Super Bowl ad. Budweiser, after 37 years of producing Super Bowl commercials, is opting out to focus its more attention on bringing awareness to the COVID-19 vaccines. I guess that's fine, but I want them to bring back the beer. How about you, Tony?
Okay, this one is applications for fall semesters at elite institutions skyrocket. Harvard up 42%, Yale up 38%, NYU up 20%, and Princeton up 15%. Despite all those going up, the S&P Global issued its fourth consecutive negative outlook for higher ed and expects colleges that were previously struggling to fall further behind. So, we'll have to see what happens. Back to you, Captain.
All right, next on our list, Target is spending $200 million on a next round of bonuses for their workers. I think I just might quit my job. Back to you.
Up next, we have the S&P and Nasdaq once again closed at all-time highs last Monday. This seems to be trending week after week. Back to you.
And next we have Chipotle will now run its first Super Bowl ad. Huh, go figure. I thought it was losing hype. Can't be too sure, but I think it's losing hype. Back to you, Tony.
Next, we have Instagram is launching a new professional dashboard for creators. Should be pretty cool. Can't wait to check that out and see what they got in store. Back to you.
Next headline we have Subway, and they are working with a licensing group to bring their great subs straight to your local grocery stores. And I'm not talking about those standalone Subway stores that you see when you walk in. I'm talking about foot-long subs waiting at the deli for you to grab and go. Back to you, Tony.
Next up is Amazon is launching Guard Plus. This is a $4.99 monthly subscription service that tasks Alexa with detecting strange noises and aberrations. This can alert homeowners and put them in touch with human agents. So it's kind of like a security system launched by Amazon. Pretty cool. Back to you, Captain Finance.
In other news, Hobby Lobby is discontinuing its 40% off coupons. At least we still have Bed Bath & Beyond's 20% off coupons. Ain't that right? Back at you, Tony.
All right, next up is Toyota regained its title as top-selling automaker, surpassing Volkswagen in vehicle sales last year. Pretty cool. All right, back to you.
Lowe's, they're going to hire 50,000 plus workers for the spring. If you're looking for a job, like I am, that might be a place to check out. Tony?
All right, next headline is GM said it would stop selling gas and diesel-powered vehicles by 2035. An ambition move that plots an emission-free future. Pretty cool. I like what you're doing, GM. Keep it up.
Okay, Ford is expecting to sell 50,000 plus units of its new 2021 Mach-E Mustang. In the first quarter of production, I'm gonna pass. I'm waiting for the electric ship, but there is a picture. If you click on the link to see what that looks like, back to you, Tony.
Qualtrics, I think I'm pronouncing that correctly. The SAP-owned seller and survey software showed you can do well on the stock market without the Reddit bump. Sales gained nearly 40% in its first day of trading. Pretty cool.
All right, and American and Southwest Airlines posted record annual losses for 2021.
Next up is Robinhood, the private brokerage trading platform, sees lawsuits in regards to the GameStop moves that have happened. But experts are kind of doubting the narrative, considering that Robinhood has genuine reasons for restricting the sales. Back to you, Captain Finance.
All right, you all take care. I'm going to have me a mojito. See you later.
Hey Tony, I'm back here. I hope Captain didn't mess up anything too much, but through that list, was there anything that stuck out to you that you want to elaborate on?
Yeah, definitely. And Captain was excellent. But the big one I think that everyone's kind of talking about is the GameStop stock and the short squeeze and the short selling and how the stock market's just been absolutely crazy this past week. And we kind of wanted to just talk and discuss a little bit about what happened here. So, Rich, you want to fill in like the stock options, like how that works and like how the stock became shorted?
All right. So I have to sort of just go back to like beginning to end when I do this. So when I re-envision this is Wall Street, hedge funds, a lot of people always, they short sell stocks. So that's what they do. And it's been doing it for years. We live in a world now where everything's on the internet, our social communities are on there, people talk, and information travels at the speed of light nowadays. So once someone sort of heard about this, that these big companies are going to go ahead and short GameStop, there was a sub-Reddit group. Reddit is a group where you have all these different groups and you can go in there and just communicate with each other and just sort of hang out like a Facebook group or something like that. Well, there's one called Wall Street Bets, and it's specifically all they do is just you and me, people like us, they go on there and they talk about, hey, what do you want to place bets on? What do you think is going to do good? What do you think is going to do bad? That's all it is. It's just like tips for like stock trading and day trading and stuff like that. Well, someone heard word. Well, I heard that everyone's going to short GameStop. Wall Street is going to short them, which means Wall Street thinks GameStop has been declining. It is a brick and mortar store. No one really buys hard copy games anymore. Everything's digitalized. I don't know how to say that word. There you go. Online nowadays, you sort of buy it, and no one's going in to trade in their games. And so it's just sort of been on the decline. They've been losing revenue, and someone's like, well, why don't we go ahead, because Wall Street's saying, it's going to do bad. And I think last spring shares were at like $4.
Yeah.
Like that's what a share was. So it was sort of like going down. They're like, we don't think it's going to really be around any longer. So let's go ahead and like bet that the shares go from $4 to $2. I'm making these numbers up. I don't know what the heck they were thinking, but that's the gist of it. So they're like, we're going to say it's going to lose $2. So in order to do that, you have to go to a brokerage and you place your bet. And the brokerage takes a fee out of that. Whatever that fee is, probably per amount of money you're going to bet. And hedge fund managers, they use other people's money. So they're all paying them to try to hopefully get them good, gains. And the hedge fund was like, we're going to put a bet. We'll go $4. We'll go to $2. And the fee is taken. And what happens is that hedge fund is actually borrowing those $4 shares, because you can't just buy the $2 shares. They're not there yet. So you actually have to borrow those shares from the brokerage. So they're prepaying. They're giving them to you. And if it does hit $2 and you sell them, the hedge fund makes up that difference. So they actually make the $2 difference, but
From
obviously
$4
it's
to
not
$2.
$2. It's
Yeah.
$2 times however many millions of dollars they collected from their people. So it's a lot of money. So that's how a short works, is you're just betting on that. And now you're like, well, where did the $2 difference come from? Who's paying that? Well, somebody else buys, I think it's a put option where they're betting it's actually going to go up. They're just going to put their share in there. And so when it goes down, that someone else take that bet, the brokerage made that money off the transaction, and they're saying, well, you lost, so I'm going to take your money and I'm going to pay out them. So you have to have somebody who's betting both ways.
Hold on. So if I understand, the brokerage takes the option calls either way, put or call, and they make money regardless. But these people, these hedge fund managers bet GameStop's doing bad over the course of the last 5 years. They bet, hey, these stocks are going to drop. We're going to do a call, some sort of option call on these that it's going to go down. And they bet a ton of money, right? And then this is kind of at the point where the Reddit people come in.
Yeah, and so really with this Reddit, where this comes into play, or hey, Wall Street's betting it's going to go down, as a joke, let's just throw all of our money in there and let's screw Wall Street over. And so it has, I think now about 6 million people are in Wall Street bets. Now, obviously, more people knew about it than just that, because word starts going out and internet and stuff.
It was all over the headlines.
So everyone, there are people who are under the age to even open a brokerage account. We're trying to ask their parents, I was hearing, just to go ahead and do this. They have no clue what the heck's going on. They're like, well, so-and-so, this meme told me to go ahead and put money in GameStop and I'm going to win. So all of a sudden, everyone's doing it. GameStop stock is shooting up. Well, now Wall Street, they're like, well, wait a second, what's going on? So what happens in that situation is how they lost money even more, is the brokerage then comes back to Wall Street, who put the option, and says, hey, listen, I know you placed a bet to lose money, but it's been, or that the GameStop will lose, stock value, but now it's running up. You can still play this game. You can still short it, but I'm going to need some more money now, because now we're playing at higher stakes. So you actually are going to owe me, let's say it goes from $4 to $20. You're going to owe me now a little bit more money to still, I need that collateral to get you in here. So it's at $20 now. What do you want to short it at? Do you want to short it at 18? Do you want to short it at 15? That's fine. But now you have to pay the $20 share price in order to get that in there. So then the hedge funds are like, okay, so they go back to their investors. They're getting more money. They're taking out loans. They're putting it in because they think it's going to go down.
Right.
Well, Wall Street bets, Reddit, right? People, they keep on going up. So now from 20, let's say it goes to 100. Now all of a sudden Wall Street's like, well, it's got to come down eventually. So let me go back to my investors, get some more money, pay that transaction fee, spend the money, and we're going to short it again from like 80. And it keeps on going up. And so that's how Wall Street lost money off that, because they kept on borrowing and borrowing and borrowing more money trying to short the stock. And it never went down. It just kept on going up.
And one other thing that I wanted to notate is during like all of this, throughout the timeline while this was happening, the GameStop stock was shorted by the big hedge fund managers. It was shorted. And then there was some news. There was a little bit of a headline that kind of like boosted the GameStop stock up a little bit. And this is kind of what fueled the whole thing. And this was that the CEO of Chewy, I don't particularly know his name, I can't remember, but he decided to take like a 9 or a 10% stake in GameStop. So he bought into the company, and this guy has been considered like really good online, business expert, gonna turn the company around because it's doing really bad as a brick and mortar, and really help them make the transition to digital gaming and stuff like that. So when that news came out, the GameStop stock saw a little bump.
Yeah.
And then at that point, the Reddit folks were also being like, okay, we're gonna drive this stock price up to really screw over those hedge fund managers and stuff like that. So it's kind of like a story of, David and Goliath, where Goliath is these huge hedge fund brokers, managers, and then David over here is like the little Reddit subform who in numbers is able to really manipulate the market and bring it up, which is just a crazy story.
What the hedge fund managers are doing is they're trying to just get money for their clients. So that's why you also hear in this whole story, other like AMC movie theaters. That was another one where this Reddit group is saying, what other stocks is Wall Street going to start to short? Let's go boost their price up. Well, obviously it's a pandemic. No one's going to AMC. No one's going in, and they've just been losing money. So Wall Street, they bet we're going to short AMC stock because they're losing money. And then Wall Street started boosting that back up, or not Wall Street, but the investors, Reddit investors, day fund traders and stuff like that. They started throwing money at AMC, and they were just trying to figure out any way they can screw Wall Street by putting in stuff that they thought was going to pretty much be short.
Well, really, what's the bottom line here? Everyone's trying to make money, right? And AMC, from my understanding, wasn't quite as shorted as GameStop. Like, GameStop had over 100% of its shares shorted, which means people are borrowing shares and doing the options, and then they're borrowing those borrowed shares, which is how it reached over 100%. AMC, I think, was around like 60 or 70% shorted.
And there was a couple other companies in there too that people were trying to short. And it's like, I get it. And I'm not like, I heard arguments for both, like why the short even exists. People are saying it shouldn't exist and things like that. But if you think about it, though, the hedge fund managers, they're just doing their research. They're doing stuff that you could be doing too. You can short AMC. So, like you can short whatever these stocks are. So they're just researching companies that are probably going to do bad so they could make their clients money, just how you're looking to try to see what stocks I can put my money into that's going to grow me. So everyone's just trying to do their research, where it sort of just, it's interesting for me is the people in this case aren't doing research. They're just listening to memes. They're listening to Joe Blow down the corner who says, hey, go buy this. Like, I've seen a bunch of tweets and a bunch of Facebook posts of saying, oh, someone go buy
no idea what they're talking about.
Dogecoin or something like that. I don't even know what that is, right? Just buy this. Well, it was a joke cryptocurrency that started back in something, and all of a sudden everyone takes to it and start buying it. We go back to investing. If you have your buckets filled, if you have your retirement, if you have your IRAs, your 401k matches, maybe you're getting your HSAs, your emergency fund, if you have those filled, I don't care what you do with your money. But my bet is most of these people who took to GameStop and these single stocks and they're trying to beat Wall Street, they don't have those. And that's where you run into trouble, because when GameStop goes up or any stock starts going up, how do you know when it's going to come down? How do you know if it's going to keep going up? So if you're somebody who threw all your money in GameStop at the top, that was it, and all of a sudden it shot down, now what? Now you lost all that money that you threw in there, and you have no retirement, you have none of your buckets filled, you don't have an emergency fund, and now your tires blow out, now you're taking a loan, and now you have interest on that. It's a bad situation. But if you had all of your buckets taken care of, if you lost the money, who cares then? So what?
Not to mention, if we always preach long-term investing, ETFs, index funds, mutual funds. If I personally dabble in individual stocks a little bit with my play money, which is what I like to call it. But options, I do not option trade. I do not buy option contracts, anything like that. That is really like betting. It's really like betting. And it's extremely, extremely risky. It's very, very volatile. And, the price of GameStop has shot up, but that is not the value of the company.
Right.
That's all due to speculation, and people, and the volume of trades that have happened in the course of the last week have driven that price up, but there's no value there for the company. If you look at their spreadsheets, if you look at their sales, they're in bad shape.
Right. Yeah. It's the same stuff.
It's not valuable stock.
And that's what's sort of tough, is, you need to do your research on the companies, not just take someone random person's advice that they tweeted something and just follow suit. You don't want to do that. So, and it's very scary this day that we live in, where social media can make an influence on the market. And we've seen it with actually, just tweets from higher, like when the president would tweet about a company or something like that. If you notice that changes now, because it's social media. Everyone sees that and they're like, oh, or even if a company comes out with their reports and they're like, hey, we're going to be doing bad next quarter, or the predictions, that moves. But now it's like you have one person who says something, you get enough people riled up. I mean, they could go after any company and make it go up or down.
I got a perfect example of this. When Tesla stock was rising really exponentially, they had like a 3-month growth period. Elon Musk tweeted, I think Tesla stock is a little bit overvalued. And someone commented on his tweet and said, what the hell are you doing? I just lost $10,000 because your stock dropped to, a certain percent. Because of his tweet. And it was wild. Because, it's really crazy how, financial headlines and news can really impact the value of stock.
100%. And, if we don't know everything about this, I am just trying to collect as much information as you. So there could have been something that we said that maybe was not accurate. please let us know about that. I would love to know too in the
Definitely.
comment sections, or shoot us a message or something like that, just so we can have a better understanding. Yeah.
I think we covered some good points there, and just one little thing I wanted to mention before is also a lot of people got in deep trouble with this whole GameStop AMC trading, because if you're using Robinhood's brokerage, the private brokerage platform, Robinhood app to invest, a lot of people bought up these stocks. And because there was such high volume of stock trading, Robinhood actually had to limit and, pretty much restrict the ability to buy and sell these stocks on their platform, which caused people not to be able to sell, not to be able to buy. And now there's, a couple lawsuits going against Robinhood. Based on the research I've seen, they had a valid reason of doing this due to, really just they didn't have the money to cover the trades. And due to regulations, they can't use their traders' money. But you really got to be careful. Don't jump into these types of situations half-cocked, not really knowing what you're doing. It's what do they always say? The fear of missing out, right? That's like the big driver that like everyone tries to buy in and try to get into these things. FOMO. Don't let FOMO get the best of you.
Right.
Do your research about investing. Figure out an investment strategy that works for you. Something hopefully stable, and make sure you talk to a financial professional about your risk tolerance, all that good stuff. Don't look for the get rich quick schemes, because they generally don't work for the majority of people. You're gonna be better off long-term investing.
100%.
All right.
Well, that wraps up this episode, and we hope you enjoyed your morning coffee. Tune in next week to see what news is brewing. In the meantime, don't forget to follow us on Facebook and stay up to date with some of these current finance trends. We post those quite often. And hit that thumbs up and subscribe button to help support our channel. All right, see ya.
See ya.